Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex Outlook for the week starting on 23rd until the 28th of September 2018. Hard to believe it's September already, right? So first of all, thank you very much for finding the time watching this video. I hope it helps you. I hope it gives you some good ideas to trade for the coming week and to follow up on your own watch list. If you enjoyed the video and enjoy the work, please show your support back. Hit the like button, drop some feedback below the video on the comment section. It will be very much appreciated. Your support, my personal motivation. On Monday, I will, as always, publish the weekly Outlook PDF format. So just come back to the video, and below, on the description below the video, you would find a link to the PDF. It also would be sent by email, so you can just follow up the emails on the newsletter and you would receive the PDF once it's ready. Once again, we make it for you. Hopefully it makes things clear and help you. So the previous week was mainly around the tariffs and the taxes, Trump versus the world, and of course the Brexit rumors, still rumors mainly, and still very emotional reaction from the market, trying to figure out what and where. So what we will be doing, as every single week, we will go over the outlook from the previous week. This is the one, that's the PDF format I was talking about before, and we will follow up our list to see what of the things follow our plan and what is the plan on the current week, because during the week things change. So let's begin. That was our previous stuff, the previous outlook. Idea for the euro dollar was bullish. We wanted to see a buy opportunity as long as this low holds. So where is my euro? Here. So this is basically what we got. And we got this rally we were looking to get. It was a good trading opportunity. The trend line is following both the daily, both the 4 hour. This is the 4 hour, and this is the daily trend line because of the waves and the time frame they belong to. So the question is, what's next? Now, from my point of view, the pressure remains still bullish. Weekly was last bullish divergence, therefore the daily must become a corrective cycle. So daily has to be the one that develops two waves, and it does it right now and manage the divergence. And the question is, what are the levels we have it from? So we take a look on the euro dollar. We are currently facing the 61.8. Okay. Now the issue with this 61.8 is that the first leg was 8 candles and the second leg is basically the same size. So it's too early for massive sales. Plus, if we remember the cycle from the weekly, then we should be aiming the 38.2, which was reached. And if this is the special cycle format, then it could rally all the way to the 50%. And that brings it to the 50%, to the 161.8, to the 100% expansion of this cycle. So my point of view is we are still bullish, but this becomes the area where very likely we will start facing the sells. So what we are doing is we are dropping to the lower time frame, the 4 hour chart. We should start looking for any kind of format for a sell. That could be, for example, by break of the trend line, then look to sell the rallies, like rally trend line, breakout, look for possible sells. But most likely in such cases, what the pairs does in such opportunities, in such scenarios, is making false break, maybe even more than that. So the best thing in such situations is to get the structure of lower lows. So once you get any kind of movement and you start to see lower lows, this would be your place to start looking for bearish format, to look for sell continuation. So the first critical area for the euro dollar is right here, the 61.8, and if it goes above that, then the next area will take us closer to 120. So the next pair we had on our list is the euro versus the pound. The whole thing we wanted to see is a new low to be reached, right? To clear this low, and from there to get rallies that we will want to go and sell. So let's take a look on the euro versus the pound. This was our plan. This was the area we wanted to see cleared. So far, working by the book, I would say, right? We got the low, we got the rally with the last trend line broken, and so far everything perfect. The biggest question is what's from here. Now, according to the weekly cycle and its triple cycle, we require double wave correction or a range. Now, theoretically, we got a double wave here. Would that be enough for the euro pound to continue? It's still early to answer. And the way I see that, basically, as long as the last stop holds, this is the invalidation for this scenario, I would still be looking for possible sells. Now, and here comes the very important now. The problem with that current scenario of the rally, it's in one wave, not two waves, because after triple cycle down that we were looking and we are still looking at, the best corrective mode is two waves. After that, after the breakout of these two waves, this is the perfect time to start looking for sell setups. And currently it's running in one leg. Well, mainly due to the last comments and rumors from the Brexit conditions. Now, if that will turn to be from the beginning of the week in two waves and we'll manage to get a breakout, perfect. This is what we want. So far so good. Then we can start looking for sales again. However, if the week starts with one straight move continuation and it goes through 61.8, that's a big warning sign from the market. Leave the sell ideas at this stage. Okay, so that has to be clear. So if we cross above the 61.8 in one leg, this is a cancel of the sell plan. Okay, that's the cancellation for the sell plan. So this is the way to treat the euro versus the euro versus the pound. However, if it does make the two waves and breakout, beautiful. That's the time to start looking for possible sells again. All right, and if it goes through the 61.8, as we said before, then we might get exposed for possible further rallies. Still early to judge. However, this is definitely a scenario to keep in mind and know to apply the caution sign in our decisions if that is the way it develops. Next one on the list is the euro versus the Canadian. So we wanted to get one more low to start looking for the buys. Now let's take a look how it developed. We got a new low. Now it wasn't right away. It was after two waves though, but still we got a new low. And the biggest question is, what's now? So my point of view personally, as long as this holds, this invalidation, I would still be looking for possible retraces up, especially if the trend line is broken and hold. So we got a trend line, we break above, retraces, and look for buys. If this is invalidated, right, this is an invalidation area, and goes below that area and basically kills the divergence scenario, then we are back to possible sell the rallies plan based on the weekly. Okay, so this is the idea for the euro versus the Canadian. Next one on the list is the New Zealandian Canadian, and we were after buys of this pair, looking for the bullish setup. So we got the basically the rally, the first rally. Now the question is, how big can that remain? The last cycle in play from the weekly is bullish with the moving averages as the divergence. The daily chart supports that, and from my point of view, as long as the last invalidation holds, the daily is the one that should be in the corrective cycle. So it's bullish yet from my point of view, and buy the drops is still the plan. The way I see that, we have a trend line here, we have a massive area here of positions holding, as you can see. So we are after buy setups with the last low as invalidation. The next one on the list is our pound versus the franc. We wanted to see the buys, and we got beautiful buys during the week. Here we go. And now here is the thing that we need to pay attention to. So let's start from the beginning to understand where do we stand. So we are in a bullish two waves with a bullish hidden divergence. So that makes it triple double with possible bullish continuation. Daily was a scenario of each of the weekly legs is a cycle by itself. Classico, right? Now, as you know, I love to trade in synchronization when few time frames are rhymed in the same direction. Rhymed means we do not have disagreements. Now, since the weekly is the bullish hidden divergence and the daily supported, we are after buys. At that moment right here, daily became bearish hidden, and the 4-hour chart made it a corrective cycle, two waves, 1, 2. Trendline is broken. So the pound franc gives us now all the warning signs that there is a good chance that the bulls cannot hold their forces more than they did during this week. Plus, you know my approach, we got through, if this is the first bigger leg to be developed, we have to hold the Fibonacci retraces. We go through 61.8. So from my point of view, pound franc is a big X right now. It was a wonderful rally during this week, which finished with a divergence from the 84 hour. Now we have one straight leg. It could become anything at this stage. It might be just as a range here now, or it slightly might begin the drop lower towards 120, which is the 161.8. Just remove this cycle. Which is the 161.8 of the big cycle. So that's definitely a possible scenario for the long run. It could be a range and fight inside with this divergence to be developed, or it could go slightly lower. Right now, it's simply impossible to get a clear view of the behavior. Previous week was beautiful and clear. After it blocked with the divergence from daily and 4-hour chart, we are losing the rhyme we are working with, because the weekly was bullish, but daily and 4-hour became bearish. This is a scenario where we have to say, whoa, if the 3 time frames are not rhymed, we cannot trade. So daily and 4-hour must turn to be bullish if we want to trade with the weekly once again. So pound franc, from my point of view, at this stage is a complete X or neutral in simple words. Aussie versus the franc, we wanted to get a new low after sell the rallies, and we got that exactly. Boom. So this is the place where we got the Aussie franc going, but it's a double bottom and it's holding and it's breaking with the convergence. So from my point of view, now the daily has a stoppage with this 4-hour chart cycle. Take a look, this is a triple cycle, I'll show you further. So basically we are after a corrective cycle. Corrective cycle could be 2 waves or a range. So that's the very possible scenario. Before we will see how it develops and are we going lower or higher. So as for now, with this zone as invalidation, the Aussie versus the franc is expected to be bullish. By ideal, we should be aiming towards 50% of this cycle, but 38.2 would be definitely a good zone to, that's our targets here and here. 38 would be a great zone already to have a good cash out. After that, we will stop and see, because we are still uncertain about the weekly. I still suspect that after this rally happens, we might see that going lower. So this is as a pair the Aussie versus the franc, and the way I see that. Now, just to be more clear here, I still think in the short term we are for rally, but mainly I think we are for longer term sells. So when we get the rally, this is the place to look for the sells. Pound versus the Kiwi was our next pair, and we wanted to see two waves correction. So this is basically what we get. 1, 2. And now the biggest question with this pair, what is going on from here? Now, previous week the whole idea was two waves, corrective cycle to the daily, and basically go with buys after. But now we must stop for a second, ask ourselves, hold on, what is going on with this pair? And we get triple cycle to the upside here with a false break and bearish divergence triggered with this tick of the MACD histogram, making now a bearish slope. So this becomes a bearish pressure right now. Daily has no signs against created yet. So the way I see that, pound CAD is going into corrective cycle, and I would basically look to sell the rallies. How long that can become? If it's daily divergence, daily might be the one that makes a corrective cycle, so daily might be the one that makes two waves or continue to play inside this range before future buys will take off. As for now, from my point of view, due to the change of the two waves, because think about it this way, we wanted to see two waves and bullish signs. We have no bullish signs here, no bullish divergence. It's a bearish pressure after a block here and kind of convergence developing. So this is a sell the rallies plan. Invalidation to all that would be the last high. The next one on the list is the pound versus the Aussie. Our idea was the same, two waves and looking for possible buy continuation. Now with this pair we are basically standing on the same scenario exactly. Weekly is double top, bearish divergence. Right now holding completely. Daily does not have any divergence by itself, but that might simply be a weekly scenario with daily to be corrective cycle. So weekly divergence with daily corrective cycle, that means we can go for two waves, we can go for some kind of triangle here. Too many variations at this stage, no clear synchronization from my point of view between the weekly and the daily. My personal point of view, this pair is not good for the longer run. We don't have the synchronization of weekly and daily, so we can go and look for short run. Short run is the daily by itself, which is making a bullish hidden divergence. That means that the 4-hour chart must be a corrective cycle, which is exactly the case that is developing right now. So we need to pay attention to these levels. 1, 2, 3. On that levels, a bullish divergence must be the case. So that could be a turnaround with bullish divergence. If we get slightly lower, then the divergence has to be here. And once the formation happened, the structure happened, this is the place to look for buys. Short term. Now we have this trend line, which we must pay attention to and possibly respect. And also, this is a very beautiful zone of an expected fight. So this is how I see the pound versus the Aussie. Most likely for this week. Short term from my point of view. Longer term we don't have the synchronization any longer. New Zealand dollar, we wanted to see the buy with a new low or basically a bullish hidden divergence to form. Where is the New Zealand dollar? Here. So we didn't have any new low. We did have the bullish divergence idea. It became to be kind of a structure like that. then it became a bullish hidden divergence. Sorry, that's not the right low. This is the low. It became to be a bullish hidden divergence for a buy continuation. We never got a new low. So again, convergence principle, making the higher highs, drop, bullish hidden divergence, continuation. So what's going on from here? The way I see that, the last divergence, the last bullish divergence developing is bullish, so daily should be corrective cycle. Daily could be 2 waves or a range. So this is the possible scenarios we have. 1, 2 before the continuation, or range. Which would be happen here, it doesn't matter because we won't buy the dips. So we drop to the 4-hour chart, we put the cycle as it is developing. We are facing the 161.8, the next level is 261.8. From one of these levels, I believe we are going to see drops and the next future buys. So drops with bullish signs should lead us for the buy, and this would become the invalidation. Okay, that's for the New Zealandian dollar. By the way, if you face the 161.8 or 261.8 with bearish reversals, this is a possible short-term sell, of course. Okay, because we need to buy the retraces after that, right? Next on the list, pound versus the Canadian. We wanted to see another low, another drop, and further buys. So this pound CAD here. This is the scenario as we had it. We got the drop, we got the rally, but the pair is now, well, was stuck in a range since then, and now making the breakout to the downside. I do not see any clear synchronization between the weekly and the daily. Weekly is bullish divergence. Daily is bearish hidden divergence. We lost the synchronization. So from my point of view, pound CAD X untradeable at this stage. Nothing clear I can see here. And that's basically enough. It was beautiful in the last few weeks. Time to say enough for this pair right now. Next one is the euro versus the Aussie. We wanted, and the euro versus the Kiwi. We wanted to buy retraces for both. So here is the euro Aussie. We wanted to see the 2 waves, and we did. 1, 2. We got a bullish divergence. We got a rally. Now the question is how big the rally is. Now let's return quickly to the weekly cycle. On the weekly cycle, we are still inside the big range. So later or sooner from here or from higher, we are expected to have a big sell-off. Now, on the weekly, we have a divergence triggering right now with MACD ticking to the downside. Daily is a double cycle with a bearish divergence by itself. So the biggest question is, are we going for a deep correction right now, and is it over? The way I see that, weekly is bearish divergence, so I would be looking for 2 waves on a daily cycle and then to decide. So if that could be the case, that is exactly what I would be looking to trade. From my point of view, as long as this is the structure of lower highs, lower lows, we are in short term expecting one more deeper low before the rally takes place. So this is the view as it develops right now on the euro Aussie. Too early to decide if that will be for the long term or just a short term correction. That's why I prefer to trade such scenarios on the short term trading. Next one, euro versus the Kiwi. Same story. We wanted 2 waves and we got the 2 waves. Now the question is what's next, because we don't have yet divergence. So the way I see that, the euro versus the Aussie, which also is building up the divergence right now, and the engulfing is a corrective cycle, meaning we require the daily to be 2 waves or a range. So the way I see that, this is what's going to happen with the euro versus the Aussie. Somewhere here, corrections, and one more push. So basically the daily should be the two waves, 1, 2, and the way I see that, 4 hour is the one to trade, so we get 1, 2, 3 correction and one more. That would be the daily two waves that I was talking about before. So from my point of view, with the weekly divergence triggered that now, it changes the cycle a bit, because from previous week we wanted to see two waves with bullish divergence and buy. We never got any bullish divergence, we never have a good buy, and right now the weekly divergence completed and triggered with an engulfing. That's a warning sign, and this is basically most likely a beginning of the short-term correction. And invalidation, very important to have invalidation for this plan, because if we break that, the weekly divergence is gone, and then we are back all the way up towards the 180 zone, or maybe even higher. So this last stop is the invalidation plan. The next one is the pound versus the yen. We wanted to see the rally and go for sell. Pound yen. So we got the rally. Basically happened so far so good. We got the rally and we have the beginning of the sell. The way I see that, most likely, as long as the last top holds, this is a kind of a false break, so as long as this holds, from my point of view, it still kind of sell the rallies. How big can that be? Not quite sure to decide yet for the long term, because we don't have the synchronization between the weekly and the daily. So definitely 38.2 would be the one I would be aiming in this pair, with this as invalidation. Next one on the list is the dollar yen, and we wanted to see the rally taking place. And this is the dollar yen. We got the rally. So the biggest question is what's next. And honestly, there is nothing clear from my point of view personally between, let's just remove these lines, between the weekly and the daily. Weekly is still making this cycle creating. That could be the beginning of the rally towards 100. That could be the the full duplication of the big cycle as well, the second leg of the big cycle as well, right here, and that might make it simply like a triple scenario here. So the way I see that dollar yen is still bullish, and invalidation for that plan would be if it fails to break this high and breaks below the low. Then the dollar yen becomes bearish. Definitely not the clearest opportunity, not the clearest pair to work with from my point of view. Next one on the list is the where is that? Swiss yen, where we were bullish, aiming the 118, and we got 118 taken this week. Now that turned to be one of the good opportunities we were facing during the week. We got a beautiful rally here. That was the little drop, and a buy continuation with a bullish hidden divergence. So 118 is reached. The biggest question is what's next. From my point of view, it's time to start looking for possible retraces. This is leg number 1, 161.8 is here. This is the critical area where I believe the pair is going to start and making the structure for sell. Critical days to pay attention to. Let's take a look on the Crystal Ball and its statistic. So 25 is a critical day, and that's to happen at the beginning of this week. And if it doesn't hold, then second is critical day. So every rallies here are now most likely for a sell opportunity. And the next one on the list is gold. My plan was and remains sell as long as this top holds. And so far it does hold. That's the invalidation. So I am bearish here. That was and remains my plan. Question is what will happen if this is broken to the upside. If this is broken, then very likely we are for a bit deeper leg before the sell continue. From my point of view, I am still here in preferences of selling the rallies, even if we have a new high. I prefer to look for sell rallies and skip any possible buys. My personal view. I might be wrong, of course. Silver, same idea. We want new low before the buys. We are still waiting for that to happen. So basically, it's still the case. Nothing new. Sugar was another one that we were looking to trade. So we are here with the drop and a possible reversal. That sugar, that was the case for us. So we got a drop and we got a bullish hidden divergence here. I like it a bit less because it's one straight leg. However, that's commodities. That's not a flow, not a fluent market like the Forex. My point of view, it was and remains bullish, maybe with smaller risk, but this is the invalidation, and I expect the sugar to continue higher. So even if we have any kind of a drop, it's still, from my point of view, looking for the buys with this as invalidation. So this is for the where is that? For the sugar. Indices, DAX, we wanted to get the two waves before we start looking for, well, the rally before we start looking for the sell. Let me just find that. So here we are. Right now we got the rally. Now we are building up a bearish hidden divergence between the two highs. Right? So 4 hour must become the corrective cycle. 4 hour chart makes the two waves. So let's put the numbers and see where do we stand. Good. So this is our first critical area which we should be looking for sell setups, and this would be our next critical area for the sell setups to take place. And the next one was the Ethereum. So Ethereum versus the Bitcoin. Let's put that here. ETH, BTC. Here we are. So we wanted to see another little drop as long as the last low holds and go for buys. So we got it. We got a drop. We got a bullish hidden divergence. We got the rallies. And from my point of view, it's still the case. I would cash partial right now because the daily is a bearish hidden divergence. So that might be continuation for one more low. So cash out. I will write it like this. It's important because many traders are dreaming about a big fish. When you have signs against you, don't be dreamy, be smart. Cash out partial, make your profits, let the rest run, but at least make sure you don't lose on this trade because that could become one drop. Like with the pound franc, for example, the dreams could be huge, but the reality might be different. And it's important to listen to the market when you have the signs against you. Make the money. Trading is about making the money, not about being right, not about being smart, not about being better than someone else, not about having the best statistics or the holy grail or anything like that. Trading is about making money. When you have the signs against you, make the money. And if it holds still, that the level we might get it is much higher somewhere here. So I am bullish, looking for buy dips as long as the last low holds. If it breaks, invalidate. Now we have two new things in our view. That's Ripple, which got some good news during the last week, making the false break, holding the double low here, bullish divergence in play. From my point of view, buy dips for the Ripple. This is the invalidation, and buy dips is the plan for the Ripple. Ripple versus the BIT is also wonderful opportunity. Same story, holding the big two waves, making, here this is the weekly, making this to be as a cycle double bottom, and the plan is bearish, so buy retraces. Invalidation right here. So that's the two ones. Now back to the Forex, because we have two more great opportunities to discuss. Aussie versus the dollar wasn't too clear from my point of view on the last couple of weeks, made it much clearer during the beginning of the week. This is why I invite you, as always, to join my live trading room, so you have the live updates during every single day, not from week to week, but every single day in the live trading rooms, in the trading reports, and you know what to do. And every single day, what kind of setups to trade. So the Aussie dollar holding the two waves bullish divergence, meaning the daily should be corrective cycle, meaning two waves or a range. So that could be the case. 1, 2, or any kind of a range. It doesn't change our plan because we are looking for buy dips. Aussie dollar would drop the Fibonacci retraces. I would definitely expect it to reach the this area, and from one of these levels to start and making the correction, which after that we would want to go and to buy. So Aussie dollar is bullish, buy retraces. This is the invalidation zone. And just make sure I didn't miss anything of the interesting ones. New Zealand in franc, from my point of view, another great opportunity to follow. Weekly does not have any bullish divergence in play. Well, we can look even on this low. We have a new low, so we don't have any divergence in play on the weekly. So daily is the one that has the divergence in the cycle, therefore 4 hour has to be the corrective cycle. So 4 hours should have two waves or a range. Currently we have the first. If we get a second rally, look for sell opportunities. That's the another addition for this week. Pound dollar is uncertain for me. I wouldn't deal with that. I have nothing clear there. I've been asked a lot about this pair recently. There is nothing clear with all the Brexit going on. I would not put my money where we don't have clear synchronization between the different time frames. That's all, my friend. So thank you very much for watching this video. I hope it was helpful for you. Quick important note: on the description below, on the comments below and the description, you would get you would find invitation link to completely free Telegram group community which I opened. This is for you. I share, me and Jordan, which is the chief trader in the Traders Academy Club. We share almost on daily basis, even sometimes few, good setups to follow, articles, educational part, strategies, and more. So this is completely free for you, for the community of trading. So the link to join is right below on the comment section. And that's all. Thank you very much for watching this video. I hope it helps you to get some ideas for the trading. If you enjoy that, please show your support back. Feel free to share that with anyone who you believe can have a benefit and advantage by watching this video. Thank you very much for watching. I wish you a wonderful trading week. I'm Vladimir Ribakov from Traders Academy Club, and I invite you to join my live trading rooms. Everything is on the comments in the description below the video. Thank you for your time. I'll see you next week. Bye for now.